Welcome back, value investors. Today was a down day, a big one on Wall Street. And I think it's the beginning of a major pullback. I'd like to go through the reasons why I feel that way. And more importantly, how this is an opportunity. Lower stock prices in companies that I really want to own is a really bit of good news. I'd like to go through some stocks that I'm continuing to collect more shares on as we see this big pullback. Let me share with you what I'm seeing in the market and how I think March is going to play out. So it was an ugly day on Wall Street. The S&P was down 1.2%, the Dow was down about 1.2%, the Nasdaq was down almost 2%, and the Russell 2000 of small and mid cap stocks was also down. Overall, it was a down day, and it was really expected because stock prices had been up so much that we had to have a pullback. This pullback, I think, is going to be healthy. It'll kind of relieve a lot of these high prices that I think are going on. I still think certain stocks are way overpriced, but in certain places, I think there's opportunity to find some stocks that are undervalued and are good to buy additional shares in. So all the exchanges were down, but so were the Magnificent Seven stocks. Apple was down almost 3% just today, and year to date, it's down 8%. Overall, Apple is in correction territory. It has actually become quite interesting to me. And I actually bought 6 shares of Apple today on this big pullback. Amazon had a pullback day, but overall, year to date, Amazon's still doing really well. Amazon's really doing well. I think they're doing really well because the AI tailwind, there's a lot of AI hype, and with AWS being part of Amazon, I think they have a nice tailwind. Nvidia, I believe, is way overpriced with the AI hype. They had a pullback day, but overall, year to date, they're still up 76%. Tesla, boy, they are a basket case. They were down more than 4% today. Year to date, down more than 25%. Boy, I'd hate to be a Tesla stockholder today. Alphabet, it was down only 0.77%, but it's down year to date. And I think Alphabet has its set of problems. Primarily, they just can't get their AI story straight. So they got to really correct that. Meta had a down day, down almost 2%, but year to date, it's doing really well. I think Meta is healthy. I think a good pullback on Meta stock is in order just because their stock's up so much. It should come down a little bit. Then Microsoft was down 3%, and year to date, still up 8%. And Microsoft is, I think, in good shape. They're a solid business. I don't think they're overly priced. They're overpriced by some margin, but not too terribly like the likes of Nvidia. Looking at the sectors and what sectors did okay today, energy led all sectors. So oil companies really kept their value. Consumer staples, which makes sense whenever growth stocks and the NASDAQ is down, consumer staples tend to be okay. Because so consumer staples did all right. Financials held their own. And then from there, it was a big drop. You have communication services down over 1%. The S&P as a whole was down more than 1%. Consumer discretionary was down big, and then technology was down really big. So it's showing that just for the day, we have just a solid pullback across the board. Again, it's a healthy pullback. Let's get some of those prices back down where they should be. And, whenever you have these pullbacks, it's not like they just spread the same percentage against all stocks. No, some stocks go down far more than others. And that's where the opportunity lies in the stocks that get probably priced down significantly more that are a good value. That's where I'm picking up shares of stocks. So we have news coming up in the next few weeks, and I wanted to comment on some major themes that are going to either help the market or hurt the market, starting with bad news. In the next couple of weeks, you're really going to hear that the Federal Reserve is going to talk tough on the economy and talk tough on inflation. They still have not declared victory over inflation. It's still above 2%, which is their target. They will continue to put pressure on the economy in order so that they can get prices down. What's enabling them to do all of this work is that unemployment is not a big problem. People have jobs. If the unemployment rate was really high, I think there'd be a lot of outcry that what are these guys doing? They're running, people out of work, which is really tough. But that's not the case. So the Federal Reserve is going to continue to talk tough, keep interest rates higher for longer, and really have some uh, tough words to say. At least what you would hear is that they're going to be hawkish over the next couple of weeks. There's going to be multiple interviews. I think the Federal Reserve chairman is going to be on Capitol Hill talking to politicians as he answers their questions. And the following week, you have a Federal Reserve meeting where they're going to make a decision on inflation, or excuse me, interest rates. So All that, I believe that's the biggest headwind the stock market has. The other headwind is politics. You have a lot of elections going on, and you have a lot of negative headlines, a lot of negative speak, just a lot of tension. And that tension, I think, is going to make people less likely to take chances, probably more likely to play it safe. And what I believe is that's a light headwind against stock prices. The biggest headwind being the Federal Reserve tough talk, but the political landscape and political environment does not help either. Some good news is that people have jobs. I think there's plenty of employment out there, which is good. We don't have that as a big problem. And there's not a big recession that's been claimed. They're thinking of no landing or a light landing recession. We'll see how that plays out. But overall, I think that everybody having a job is good news. Pullbacks are a natural event in a stock market. We saw a major pullback in 2023, and we saw a light pullback as well. And both occasions really opened up opportunities to buy stocks at the right time and then see a really nice gain for the remainder of 2023. So this pullback is just good news. Let's get some of these prices down so it makes the investment in companies even more attractive. Let me share with you the stocks that I'm looking to buy in this pullback. I'm buying Apple, which has now entered a place from a stock perspective that's attractive to me. This is a premium company, a great company, and you can buy it at a fair price. Alphabet is another great company where I believe you can buy it at a discounted price. Zim is a great shipping company, heavily discounted. 3M, great company, I can get them at a discounted price. Ternium, excellent space, profitable, pays a high dividend. I can get them at a discounted price. Cigna, I can get them at a discounted price. Excellent health payer company. And then CVS, discounted, just a great performing company. I want to be an owner in CVS. These are the 7 stocks that I continue to buy shares into as we see this pullback and the lower prices that come with a good stock pullback. So this pullback and the bears coming to the market and lowering prices, it's a good event. We needed it. We've had a really nice 16-month run where stock prices went up 42%. That was great. That was great. And you know what? Well, we're going to have another run like that in the future. But for now, we need a solid month, maybe 2 months of, the stocks coming down 10, 50%, maybe even more. And it's a good time to really sharpen my analysis, really keep an eye on companies that I want to own and continue to buy shares at a discounted rate. I appreciate you watching the video. I hope you found it interesting. Good luck investing in 2024.